How's it going, fellow traders? Magic Trader here, and this is the CFTC report for September 24th, 2019. Here's a snapshot of the positions held by the institutions as of that date. And so let's take a look at what we have in terms of gold. So, as I have laid out in much detail in the latest Arujo report, we see an increase in longs from 341 to 370. Now, many traders that I was listening to on Twitter were trying to understand why the big increase here in longs by the institutions. And so I've spoken to some of them that actually told me that this prevented them from even thinking that they should go long on gold. And the reason being is because they see them piling in longs. The last thing they want to do is be going short. Well, if you take things out of context, then you wouldn't understand why they were adding those long positions. But we understand that these long positions being added was this big green candle here on the weekly chart. And so what was taking place here on the lower time frames was a momentum shift that was going to help facilitate a drop in price, which is exactly what took place. So yes, they were increasing longs, but that was just to help facilitate the move to the downside. So the portfolio is doing well with the short positions that we opened up at the highs, and everything is playing out exactly as we have determined it would. Now we go over to oil. What do we see with oil? We see the big drop from supply. Now you remember there was the news a couple weeks ago about airstrikes in the Middle East, which made everybody start buying oil. Well, they bought oil right into supply, and then the institutions dropped the price, just as we were expecting, right? We saw them increase longs as price before price rallied up, and then they increased their shorts from 99 to 104, pushing price back down from supply. So you see, when you match the data with what's happening on the charts, and you have the correct supply and demand zones drawn on the charts, and you understand market dynamics and how the charts, the price will usually move throughout the charts, you'll know that we were expecting a move to the downside. And I mentioned this on Twitter as well, so hopefully you didn't get caught going long oil. As for the dollar, so we see an increase in longs from 49,000 to 50,000. At the same time, keep in mind that contract expirations were used to dramatically reduce short positions, which was in preparation for this move to the upside. So we were expecting this move higher. That is exactly what we're getting now. And we can see by the big reduction in shorts, we have long exposure now sitting up at 86%. Alright, now we take a look at the Aussie. Now the Aussie, we saw during contract expiration they dropped their total shorts from 90,000 to 74, but they've since bumped them back up to 93, up at the highs, facilitating a move to the downside. So they also increased longs from 34 to 46,000. Okay, now remember, all this happens during this move to the downside, but before this move to the downside there was a move to the upside. So these longs were likely causing that move to the upside. The big move here was the increase in shorts, causing price to drop, expecting a move lower on the charts. So now we have the US CAD, and we see that contract expirations, they increased short positions from 54,000 to 62,000, and then boom, right here after the rally, they dramatically close off their short positions from 62,000 to 40,000. Interesting, right? Because we've been expecting a move to the upside to come, and so this big increase could be in preparation for a breakout to the upside like that. So far things are slowly starting to take shape. Now we have the US Swiss franc. We see an increase in longs as price was consolidating. We've since seen a break to the upside, so price is moving along with the higher time frame supply forces that are in play. And we see shorts also a little bit aggressive. Bottom line is we see both longs and shorts are both above average size. but that is because of what was taking place on the charts. I also have to mention here is the break of momentum to the downside on the weekly chart, which opens up that move to the upside. So that is taking place right now. We do have an obstacle up here on the monthly, and we'll see how price does when it gets up there. Euro, we were expecting a move to the downside. That is what took place. In terms of positions, they closed off their longs and they closed off some of their shorts from 232 to 221, basically reducing their overall exposure, which is at max. Okay, we're seeing all-time highs in terms of total positions here in the markets right now. This is like big stuff. We're seeing it with the Euro US dollar, we're seeing it with the Kiwi dollar as well. So interesting stuff that's taking place right now. Price is hitting demand, so we could expect a reversal to the upside to take place at any point. Pound US dollar, we got that move to the upside from profit taking on short positions, which is what we were expecting. All-time max positions on shorts were 149. We just came very short of hitting that, but extremes, they needed to take profits. It caused price to move up, so that's what they did. As you can see, they weren't accumulating a long. That's not why price was moving up. They were not accumulating a long position. They use contract expirations to greatly reduce their longs. Okay, we see longs are cooled off. So if longs are cooled off and price is moving up, it's usually from profit taking. That's exactly what happened. 147 down to 105, massive profit taking over these weeks. And so that's what we saw here. Okay, so now we take a look at the US dollar Japanese yen. Price came into supply, and what is taking place as price was sitting in supply. They reduced shorts from 50,000 to 45, and they increased longs from 26 to 32. Now, don't get the impression that they're accumulating a long to break it to the upside. I mean, remember, at the top of that wick there is a move up, which could explain the increase in longs. So we're still waiting to see what's going to take place. We have all the time frames down, so bearish sentiment becoming a little bit more neutral. They were somewhat aggressive with shorts here, becoming a little bit less so, but I'm sitting on the sidelines waiting to see how things are going to play out. We are already positioned on that pair as well. Kiwi, it's dropping, and we were expecting it, even though we have all-time highs of short positions, 59,000, okay? And we also have all-time highs of total size. So we got longs pretty much doing nothing, shorts very aggressive, but since we are seeing all-time highs, we can continue to see new highs be created. So we don't know exactly what we can expect. Anything can happen. Price can reverse and head to the upside. We could see some profit taking causing that as well, or we can see all-time highs continue and a drive even lower. Supply and demand dynamics suggest that there's going to be a move to the downside, so we just have to manage our expectations based on the positions of the institutions. Alright, ladies and gents, so there's your CFTC report for the data recorded September 24, 2019. If you have any questions, reach us at www.whiteoakfx.com. Thanks, and have a great week.